Hey guys, this is Baeza, and I want to thank you for stopping by this video to check out some more information about not only how you can get more funding, but actually get the answer to the common question that I always get, which is how do I use my business credit lines or my business credit cards, and also what are some of the ideas that you recommend on using your term loans. So here it is, guys. One of the questions that I always get is, okay, I've gone through your program. I have $100,000 worth of business credit cards from your program. What do I do now? How do I liquidate them? So here's, first and foremost, one of the things that I always say is you need to make sure that you know exactly what you're looking to use the funds for, okay? So I'll make an example as a real estate investor. As a real estate investor, you're either buying and fixing up the properties and then selling them, or you're wholesaling them, or you can also do buy and hold, which if you buy and hold, you're not really selling the property right away, which means that in order for you to make your money, you're going to have to either acquire more properties so that you can go ahead and make a monthly profit from it. And here's the way it works. I'll give you guys a scenario on all three different methods. If you're fixing and flipping, then what you want to use the funds for is, more importantly, you don't want to liquidate them, because number one, if you liquidate the cards, it is going to cost you around 3% or more just so you can liquidate the cards, because it's going to count as a cash advance. Does that make sense? So if it counts as a cash advance, now you are you're actually increasing your cost. So keep in mind, that's not always a bad thing, and I'll let you know why. Because private money can cost more money, can cost a much higher percentage. It can be 30% plus, and depending on what the deal is. But with a cash advance, typically there is a 3% fee for it. Okay, so if there's a 3% fee, as long as your profit can absorb that, then you should be okay. When you're fixing and flipping, it is always best to pay everything via credit card, because with our program, you do get the 0% credit line, plus you also get access to checks, which again, that comes with a percentage, usually is around 3%. Every bank will vary, but it's usually around 3%. Having said that, once you go ahead and liquidate those through your, let's say you get a starter check at 3%, and you don't mind paying the 3%, then at that point you can go ahead and liquidate those cards by writing that check either to your name or writing it to your company. Either way, you're depositing money into that particular bank account. Does that make sense? Okay. Once you go ahead and deposit that check into your bank account, now that converts into cash. That cash you can literally use for whatever you want to use it for. Keep in mind that when you're using cash, you just want to make sure that you know what you're doing. You're not spending it on a vacation or doing anything that's not going to make you money right away, because you are paying a little bit of a percentage on that. Second part, when it comes to, I'll go ahead and with wholesaling, okay? Wholesaling, it requires for you to purchase a property and then you sell it. So what that means is that if you're going to be using business credit cards to buy more properties, you essentially are not going to be able to liquidate the whole amount on your credit cards. The reason being is because, number one, if you do end up liquidating all of your cards, then you run a risk of the bank shutting your account down, because you become high risk, okay? Because whenever you use your accounts, especially if they're before or less than 30 days old, you become a risk. And whenever there is a risk, the banks will shut down your account, and it's happened to a couple of our clients. They didn't know any better, but that's the reason why I'm making this video, so that we can make sure that we provide you guys with all the tools and all the knowledge so that you don't make any of these mistakes, okay? Secondly, is that when you're using these funds to buy and hold, what you want to do is you actually want to use it as gap funding, something called gap funding. Do you guys know what gap funding is? But just in case you don't, here it is. Gap funding is where you simply provide the cash so that you can make that purchase later on. So think about it as a down payment. If you're going to be buying a property for $100,000 and you need a $20,000 down payment, you can partially use the credit cards so that you can use that to make the payment for the $20,000. You won't be able to make the payment for $100,000, but you will be able to make the payment for at least $20,000, which is considered a gap funding. Okay, does that make sense, you guys? If it doesn't, again, just send me a comment or send me an email. I'll put my email on the information there. But gap funding is a very interesting way of getting started, because whenever you're qualifying for a mortgage, they typically require for you to put some sort of money down, and that money could be anywhere from $5,000 up to $50,000 or more, depending on the cost of the property. Okay? When you're doing gap funding, keep in mind that the process is going to be super easy. See, you want to be able to turn that into, you're going to be able to turn that into cash. So I just have my little prop here, but you want to have cash when it comes to gap funding, because the gap funding part is just going to be a way for you to acquire more properties. Once you acquire that one property and you sell it, you'll be making your money back, which means that you can go ahead and pay for the loan or pay for the credit cards, which will again give you more money to buy another property. And you just do it over and over again until you have acquired the desired amount of properties. Does that make sense? Okay. So here's the third part. Whenever you're, the third is when you're buy and hold. Okay, so buy and hold is when you buy a property and you hold it to make that monthly revenue as rent. Okay, so typically that's going to be similar to the wholesaling or the buying and then selling, which means that you would use some of this business credit cards so that you can go ahead and purchase property, so you can use it. You can use the gap funding part. But here's this: you're also going to need to make the payments on a monthly basis. Okay? Because at this point, with this method, you're not getting your money back right away. With this method, you're actually getting your money back in increments, since you're going to be making monthly payments. Okay? When it comes to the monthly payments, the average is around 1% to 2% of the amount that you raise, or of the amount that you end up using. So I'll give you an example. If you use $100,000, then your monthly payment is going to be an average of around 1% to 2%, which means it's going to be around $1,000 to around $2,000 in a month. So the way that the funding process will work in this method is that when it comes to buying and holding, you're getting the monthly payment done by the person that you're selling it, or that's renting from you or leasing the property. So you just need to make sure that it makes sense at that point. If your rent's going to be $1,200, well, again, if you're buying a property with these business credit lines at $100,000, you need to make sure that your mortgage plus the monthly payment is going to be less than what the amount that you're making, less than the amount that you're charging for rent. Okay, because it needs to cover the minimum, and it also needs to cover your mortgage, whatever you decide to use, since you normally wouldn't be able to use the whole funds. Now, it all depends. Everything's going to be depending on the loan amount, the amount of credit that we can raise for you. But here's a kicker though. If you're looking to do that, you might be better off with a term loan. Now, our term loans are very easy to qualify. They're actually a lot easier to qualify than a business line of credit, because it requires at least a 650 credit score, which is less than a 700. The credit lines do require a 700 credit score, no open bankruptcies, less than 30% debt to credit ratio, and also it does require for you to have some sort of credit established, meaning like some open accounts. When it comes to the business term loan, it's not a business term loan, this is a personal term loan. When it comes to that loan, you require a minimum of 2 years tax returns that show a minimum of $40,000, okay? whether you're self-employed or whether you have a job or a W-2, you can, as long as you're reporting a minimum of $40,000 in your income for the last 2 years, you can qualify up to $350,000. Okay. Now, keep in mind, everything's going to be in a case-by-case scenario, but the minimum is always going to be a 650 credit score, no open bankruptcies, no open tax liens, typically less than 4 inquiries in your credit report, and no more than 40% debt to income ratio. Don't worry if you don't meet that criteria. Again, everything's on a case by case, so one of my suggestions would be, let us look at it. Let me go ahead and have my underwriters, have my team look at it and see if maybe there's other options. Some of these programs we are able to take co-signers, but the best part of the term loan is that you don't have to go through the process of liquidating the cards. You actually get cash. So with the term loans, you actually get access to cash. That means that the interest rates will be a lot lower because you don't have to pay that extra 3%. Also, it allows you to get the funds a lot quicker. So the funds will be deposited into your account typically within 24 hours of the approval, only because it is directly wire transferred into your account. And also, you get a much faster approval amount. Now, having said that, it doesn't mean that the business credit lines is a bad product. It actually just adds more value to the funding process. Okay? If you qualify for both programs, I would highly recommend moving forward with both programs because it allows you to get cash to buy properties up front. And it also allows you to get the business credit lines, which again don't expire. So even if you use it, as long as you repay it, you get it back. Okay? Does that make sense? You get it back because it's a credit line. It's similar to a credit card. You pay it, you use it, you pay it back, and the credit's still there. You get the 0% percent interest rate for the first 6 months to 13 months on the business credit line. This is just an overview, guys. So don't worry if you feel like you're confused. This is just an overview on how you can use some of these business credit cards as well as an introduction to the term loan. I will be making more videos on a little bit more of the details and what entails to actually use a term loan. But more importantly, if you guys have any questions, just reach out to my office but first go to the website. That's www.efundingexperts.com/get started, so that you can at least get the process going on whether or not we can qualify you. It's easy. All that we need is a copy of your credit report and the 2 years tax returns, and my underwriters can look at it and tell you whether or not you qualify, and if so, for how much money you can qualify for. And then we can give you a strategy session on what you can use the funds for, whether or not it's a good program or a good product for you. Because one of the things I would like to say is that not every individual is going to fit into the criteria for this program, but more importantly, this program is not going to fit with everybody's business goals and strategies. So number one, we want to make sure that this program is a good fit for what you're looking to do. So that's the reason why we want to make sure that we get into this consultation call with you first, to make sure that this is a good program for what your strategies are. We want to learn more about your business. We want to learn more about what it is that you're doing right now and how this program can help you. We provide access to credit lines. We provide term loans. We do have access to private lenders, ACH loans, so many different types of funding. But more importantly, right now, our program that is benefiting a lot more people is our term loans and also our business credit lines. Again, this is Jose Baeza. Looking forward to speaking with you. I'm here to help out. Here with my consultants, we're able to help each and every one of you guys at least get a better understanding on what you can do for your business and how this program might be able to suit you. So again, this is Jose Baeza with eFunding Experts, and looking forward to speaking with you and seeing you guys and hopefully working with you guys. So I'll talk to you guys soon. Thank you.